Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, December 16th, 2020. I am Frank Ochoa, aka PivotBoss. First off, we do have the FOMC statement and the Fed interest rate decision later on this afternoon at 1 o'clock p.m. Central, 2 o'clock p.m. Eastern. So we're going to get ourselves another FOMC key level, very similar to the ones that we've gotten before. Whenever that level is defined there, we tend to see a move one way or another. And when we get that initial move, whenever there's rejection, we tend to snap back to that level, go through that level, snap back to the level, etc. And right now we're going to get another one here today. So we're going to have another FOMC key level, the last one of the year. The recent one is back here on November 5th, 35.11.75. So for example, if there were any rejection up here and we can't go any higher, we'd likely snap back to this one at some point down the road. But as of right now, the overall trend remains intact. The previous session was tremendous with a failed low and a very, very bullish move to the upside that eventually nearly closed a bullish outside day. That completely negates that prior rejection that was developing here. Again, we knew that 36.67 was going to be an important level. That was the pivot, and bulls really reclaimed that level. We're able to push price out of this PEMA trigger zone yet again, and the likelihood of continuing higher now is very good. Again, we could squeeze right into that 37.81 by the end of the year based off of this type of price action. Now again, you got to continue to watch previous month's high. That's an important level, and also the 36.20s here, very important here. That's the recent lows. So again, overall, this market remains very bullish, but this was a complete turnaround the previous session with the shot to continue higher toward 37.81 half. Now, if we take a look here at the NQ, you'll notice very similar price action, but even more bullish. This one really led higher in the previous session alongside RTY, the Russell 2000. Great reversal 2 days running here. A nice continuation over the next several days, and now we're near highs yet again. Again, the 12.465s remain an important area to continue to watch. That's the key range high here. But for the most part, this market also remains in an uptrend, and it continues to see bulls come in and defend rotations to the downside. These rotations have been smaller and smaller each and every time, and now we're through the key range high, which could open up 12.917. And the next extension above would be the 13.369. So those are big time upside targets. And even from the low of the month, this is the low of the month, we still have a very good measured move that could be seen somewhere between 13.2 and 13.5. So again, plenty of upside here based on this move, but for the most part, continue to watch the previous month's high. Don't want price really getting back below that zone. For the most part, it could pull back, but you want it to continue higher. So we'll see how this continues to develop, but right now, very bullish tendencies out of the NQ. If you take a look here at crude oil, right now crude oil is down just a hair. Basically, it's break even up here. This one has been very bullish as well. You can see right here a breakout through the 10-day narrow range, which we talked about before. A tremendous breakout. A retest of that breakout zone and a hold of the rising 8-period average. All of those are very bullish. New highs yet again, and expecting a continuation higher until proven otherwise toward the 49 to 50 zone. That's the next major HVN above. So any pullback continues to be a buying opportunity for crude oil. We do have crude oil inventories today, and the day's range is currently just 39% of average heading into its RTH open. So again, very quiet price action at the moment. But again, any pullback continues to be a buying opportunity for crude. Any pullback as deep as weekly VWAP at 47 for the day. All right, let's take a look here at gold. Now, gold has been quite bullish overall. It has continued to be able to hold that 1820 to 1825 zone of support. But again, it continues to see a pattern of lower highs, and it hasn't yet been able to push through the 1880 level. As a matter of fact, right now 1872.40, the key range low, is still showing signs of resistance already. So again, this market has been good to bounce for short-term rotations. But ever since the high back here in August here, every single short-term rotation has been met with selling pressure for lower highs each and every time, especially since vaccine announcement day. So right now we're really coiling up like this. And are we finally going to break and push higher off this 200 period average, which has been a rising average, or are we going to see the average get taken out here and we drop lower? So 1820, a very, very important level still. Price right now showing signs of a failed high and around the top in the intraday time frames, which could lead to a bit more weakness. But again, this market needs to get above 1880 to open up the next 100 points to 1980. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.